Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, March 5th, 2018. I wanted to do a video on the commodities. In recent months, we've had quite a few, or at least several official as well as unofficial trades on various commodities, all different types, natural gas, crude oil. Sometimes I'll use a proxy to trade a commodity. In other words, trading the energy stocks, XLE, XOP, any of those ETFs that hold energy companies as a play on oil. The same way, if I'm bullish or bearish on gold, I'll opt to use the miners GDX to go long or short because you get more bang for your buck there often. So with that being said, let's dive into the charts. If you're watching this, I'll just give you a quick update on the S&P 500. I know a lot of people are really, a lot of eyes on the broad market because we are at, as I've said in recent weeks, very critical technical juncture in the broad markets. Here's that 60-minute chart. We overshot that support zone by just a hair. Nothing really impulsive when I look at it. We shot through there. Two 60-minute candlesticks closes below last week. What was that, Friday? Yeah. And so far, so good. We're repowering back up, got back above the zone. So that was a brief overshoot. And again, these 60-minute charts are just that. They help to give us a guide on the very near-term direction of the charts. But as I posted on Friday, this is much more technically significant, especially for you less active traders, investors, 401k money, and that's these weekly charts. I could show you the same on the S&P or on the Nasdaq 100. This is the SPY, the S&P tracking ETF. And again, where we continued, we've had several tests of this primary uptrend line, and that's where we were trading on Friday at the lows, and we held it. So there's another week that we've passed. Actually, it's right here. That's last week's candle. This is this week's candle. And remember, right now, nothing really matters until we close trading at the end of this week. My expectation is for more upside. So far, another successful defense, if you will, of that uptrend line or successful test. And so, as of now, you just, at least in my opinion, you can't get too bearish, longer intermediate term or anything else. In fact, it's an objective area to go long. You buy on a if you're looking to buy a dip, you go long on a pullback to support. And if that support breaks, fine, your stop's not too far below. But that's about as objective as you get in an uptrend. You don't want to be buying here when you get far away from an uptrend line or here or anywhere else here. You want to buy here, 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 here. And that's trading 101. And then finally, if and when that support level goes, that's where you sell. So let's get away from that again. That wasn't the. I just wanted to give an update in case I don't have time for a little bit to do an update on the broad markets on the front page for especially for members of the site. So here's my commodity ETN list. And this is not all inclusive. When I trade commodities, especially if I have any official trade ideas or if I'm personally trading those, I will always confirm these charts with the charts of the commodity futures. For those of you not very familiar with how this works, these commodity ETNs or ETFs, what they do is, they're not going out and buying, for example, this is cocoa, NIB. They're not going out and buying, tons of cocoa. They're just buying and selling the futures contracts. That's all they do. So think of it as a mutual fund. In this case, it only buys one thing, and it's, in this case, cocoa futures. So NIB, this has been an official trade on and off throughout the years. I always keep an eye on commodities. And as I said, I think going forward from here, 2018 and quite possibly beyond, we may be, commodities very well likely, and I expect that they'll probably outperform equities. So you can continue to expect a lot of coverage going forward for the foreseeable future in various commodities. And again, remember, their commodities are not created equal. They're not, although they are considered a different asset class, meaning equities or stocks are one asset class. Bonds, which are really fixed income, is another type of asset class. Commodities are an asset class. However, within the realm of commodities, there's so much variance. Soybeans have absolutely nothing to do with lumber, timber, or very little, if anything, to do with live hogs. So that's why we're going to go through these charts. So I'm not any particular order. This is just how they're listed. I'll click on each one. We'll finish up here. So you can see there's 20 items. Some are overlap. For example, I have cane and SSG. That's the same thing. They both track sugar. I have cut and wood. They both track timber prices. So there's some duplicity there in some of these names. So we're not covering 20 different commodities. We're only covering about a little over a dozen. All right, NIB cocoa. Looks good. This was part of the JJG trade. We'll get to that in a second. Soybeans were, or I'm sorry, no, I take that back. This is cocoa. We haven't gotten to soybeans yet. But a strong chart. It's taken out this. This was a former T3 level on a trade back here. You can see here T1 hit, T2 hit. We reversed shy. So that was a technically significant level at the time. And we gapped above it today. So this one looks good. And what I see here is bigger picture. There's quite a bit of a thin zone here, meaning not a lot of resistance till you get up here. You can see there was a lot of trading activity, some consolidation here, and then soybeans broke down, or cocoa. I'm sorry, I keep getting this one confused with SOYB. This is cocoa. Broke down, had a big sell-off, and then it based for a while in a very large basing pattern, and just recently, right here, broke out of that pattern. So this looks good, and there's just not a whole lot of resistance. Now, it's very extended. These commodities, when they run because of certain supply-demand imbalances, a lot has to do with weather, crop conditions, things like that. Plus, and you get the speculators piling in, traders like me, like more importantly, the big boys, institutional, funds. If they want to be long soybeans, they're going to bid it, and then what that causes, it tends to cause prices to overshoot where they really should go. But you can have these strong uptrends as long as there's a lot of buyers. Think of it like a thinly traded stock, and you get a lot of people buying the futures. They want to be long, cocoa in this case. Hard to say how overbought it gets, but I can just tell you from experience, these things can continue to run for some time. But I wouldn't chase it here if you weren't already long. This was a breakout recently, but we've moved up quite a bit since then without any pullback. And so just be careful. But longer term, I still very much like commodities, particularly the agricultural commodities. I think it's a key component of my long-term accounts and what I plan to do going forward. Unless these charts start telling me otherwise, yeah, I think that's a piece of the pie for asset allocation. Your long-term funds, even a trading account. Whether that number to you is 10, 20% commodities, 30%. Never You should never have 100% of your money in any one equity class. At least that's my opinion. I can't give advice, but again, this is just a way to diversify your portfolio so you're firing on all cylinders just in case maybe a couple of those cylinders stop firing. Um, it's not completely detrimental to your portfolio. Again, I have to look at and I have these on another monitor, the actual, when I go back in the long-term charts, I like to look at the futures contracts instead of these ETNs. They do a pretty good job, some better than others, of tracking prices, but I just want to make mention of that. So I'm not suggesting this as a trade idea right now at this time, but if it does pull back, I can tell you where I'd like to buy it. Here, pull back to test the top of this basing pattern. You can see very good support here. It was this T2 level. This was, I guess, the last time we had it as an active trade. Yeah, T2 was hit. So we would have taken it somewhere down here off the lows because my stop was right here. We hit the first target there, then we hit the second target there. It's a great example how a lot of the trade ideas on the right side of the chart, when they hit that final target, that tends to mark the end of a trend. So we had a very timely entry and more importantly, and this is what I always say, the hardest part that I think in trading, it's not what to buy or when to buy it, it's when to sell. People hate taking profits too early, but if you stay too late to the party on anything, and you can see, as often is the case with stocks as well, commodities tend to fall faster than they rise. And that's why I think it's important to, in swing trading, get in, get out. And as you can see, for the last, year plus, this has been a swing traders market for uh, cocoa prices, not a buy and hold market. Buy and hold market, you went nowhere for the last year plus. Until now, just recent little gains, but you could swing this long and short on these rips and dips. All right, enough spent on that one. Let's move on to the next one. Cut. Cut is one of two timber ETFs I track. Let's look at wood. Wood has a little bit cleaner chart here. We can even go back. I just jumped over to a 2-day period chart, meaning every candlestick is 2 days. It shows me 4 years of price history. Very well-defined trend line. So the trend right now is up. And what I've been reading, there's a shortage right now in lumber prices. The economy's been booming. They're building a lot of houses, as well as residential and commercial construction. They need wood to do so. Prices are high. But like anything else, this one's getting stretched, and you're going to reach that point where supply finally catches up with demand, or demand drops. There's oversupply in the market, and I would not go long. In fact, I'm watching this one. We don't have any sell signals yet, but my next trade in this one will most likely be a short trade in a swing short. I see negative divergence right here. We had a slightly higher high, roughly equal, but slightly higher high in WOOD. We had strong negative divergence at that high. We've started to roll over. If you want to know my near-term thoughts, I think we're going to come back and visit this trend line soon, the primary uptrend line. You can see my levels marked below if and when that trend line breaks, and I do think that happens in 2018. Could happen days from now, weeks, or even months from now. But once we get that, here's some levels that I have. I can see a breakdown if it were to happen soon, a back test of that trend line, a move down to this 68.75 target, a little reaction there, and ultimately a move down to 63.25-ish, maybe even more than that. But again, we're not there yet. This one's still above trend, so trade as you want. It's just one that I'm keeping on my radar for now. UNG, this chart doesn't do a great job. This is natural gas. I usually cover nat gas in the futures. I have been bullish on it recently, and it's been moving up. I've posted, if you haven't seen it, I'll put it up soon on the site. I have a chart that shows the seasonality for the past several years, where there's been a pretty clear pattern of rallies up to either starting just before the end of the new year or right after the new year. Natural gas prices rally. It's probably largely a function of weather. It's our coldest months of the year, and then after that a sell-off. So I've identified that pattern before. We were long nat gas because of it here, and recently, unofficially, I've got a long position there, and I know some others on the website are trading it. But again, this is UNG. I'll have to show you the natural gas futures, and maybe I'll follow up on that in a different post. BAL, this is cotton ETN. This chart's a little messy. I've got a lot of trend lines you can see here. This one just shows you, if you're kind of curious as what's here, this was a divergent high, meaning you had prices making a higher high from this previous reaction high with the indicators, the PPO, which is similar to your MACD, and the RSI making lower highs. That's negative divergence. This is what I do. A large part of my trading style is looking for these divergent highs and lows, especially when you get them on the daily time frame. That led to you can see a very swift correction. Not by coincidence, prices ended right at here. I had these dual support. This is a support zone when I have two support lines in close proximity. You can see that level acted as resistance back here, acted as support here, and that's where the correction ended. Came back and had a little rally. We tested that level again, had another rally, tested that level again, the top of the support zone, and then boom. So it's been choppy, erratic price action recently. I don't have a strong opinion, but what I do see on cotton, what I think will probably happen here is it might work its way up, make a marginal new high, similar to what I'm looking for in the stock markets. And if it does so, it will almost certainly have put in a divergent high. So something like this, eke out, take out those previous highs, and then reverse. You can see here the momentum indicators are not keeping up, or most likely will not have kept up and made newer highs along with price there. So that's the longer term chart. Let me see if I have anything on a weekly for you. Yeah, there it is. The weekly looked, it looked good back here. You had a bullish falling wedge pattern. You can see that. That might have been pointed out at the time. Breakout, back test, and a rally since then. But so far we have that previous high. Actually, this was the previous high I just showed you on that daily chart. Remember, this is a 10-year weekly chart. So there's quite a bit. There's now 3 reactions. This is a level we need to take out. If we take that out, the upside's limited. And the scenario that I just showed you on the daily chart meshes well with this weekly chart. What am I talking about? When I go back in time, see all these reactions that I'm circling? This is what's capped all those advances. That's not too far above current levels on this 10-year weekly chart. So if we take that level out, which again I favor, think there's a little upside. We get a pop. The bulls will get excited when they're looking at the shorter term. Again, they're not, a lot of people don't pay attention to these longer term charts. They're just wrapped up in the daily charts or whatever else. And so they'll say, well, that's a breakout new 52-week high. Of course, all the scanners, they pick up 52-week highs. They don't pick up 3, 5, 7-year highs, especially well-defined levels of resistance. You have to use a chart to figure that stuff out. So you'll see, you know, BAL will show up on the list of new 52-week highs if and when it takes out these recent highs going back from early 2017, and then it's going to run into long-term resistance. And again, my preference is at that point get a reversal, in which case we might be able to position for a nice swing short trade that could last, several months or more, probably be in the double digits as far as the profit potential. That's BAL. UGA, let's go back to the daily time frame, which is a 2-year chart. There's a trend line. I'd have to really show you my crude oil charts, and I have those on a different monitor, not sized for this video. So let's just tell you that they look similar. Crude broke down recently. And again, this is gasoline, but gas prices are going to roughly track crude prices. Broke down, back tested. I'm leaning towards a little more downside in both crude as well as gasoline. My convictions aren't super strong, but uh, I'd like to see it come back down here. There's a pretty well-defined support zone right there before I get interested in going long gasoline and or crude oil or the energy stocks. I know we still have an official trade idea right now on there. It's holding on so far. I'm referring to XLE, and that is, XLE will be largely dependent on what oil prices do. JJC, this is the copper ETN, and I think this one's due for a correction. You can see what stands out to me on this chart. We had a divergent high back here. Actually, we had a divergent high all the way back here. It goes to the left of the chart. Actually, that was flat like that. And that divergent high was followed by a correction. Then that correction was followed with a divergent low. You can see the positive divergence, and that was followed by not just that initial rally. It came back in, never took out the previous lows. Really, it would mark the beginning of this whole run up here. So either way, but within that, within a larger uptrend, you can identify these divergent highs and lows, just like we'd identified this divergent high here. There was a big, nice correction in copper. So what stands out now? Well, we have this most recent divergent high. We did have a divergent high right here at this point. There was a correction, but this second divergent high is not its own separate divergent high. It's really an extension of that previous divergent high. So although there was a correction there, it was a relatively minor correction. And now what I'm looking for, let me erase all these trend lines, show you what I'm watching. I see a pretty well-defined trend line here, uptrend line. Prices flirted through it. We had a false breakdown. We snapped back up in there, but now we're back below it. So what I'm looking at is, based on the scope of these divergences, that second divergence, I think it's going to play out for more. So far, this trend line is starting to crack. You get these little false signals because remember, this is an ETN that's trying to track copper futures. I'd have to look at a chart of copper, which I will do. This may become an official trade idea. These charts will roughly align with the charts of the futures or the actual metal. But there it is. There's support. It's knocking on support right now after breaking trendline support, and I think copper is due for a correction down to here, at least this JJC ETN, down to about the 30. We'll call it the 32-ish level, maybe down as low as 3150 or so. Try to quantify it for you. That is a drop of about 9. We'll call it about a 9 to 10% correction. What I'm looking for in copper now. All right, next one up, USO. Again, this is a simplistic trend line on my West Texas Intermediate Crude WTI chart. I have a breakdown and a back test of a more significant trend line. And again, I prefer to use charts of WTI over USO, which is one of a couple different um, crude oil tracking ETNs. There it is. We had a divergent high right here. There was that sharp correction. If you guys recall, if you've been with the site, heading into the end of the year, I was adamant, we were long oil and the energy stocks. Back throughout here, whatever, we caught a lot of the rip up, but then I started to become bearish looking for a significant correction in crude, and that's exactly what we've had so far. It dropped, this is USO, dropped 12%. This is what I believe to be the initial kickback rally from the correction. So there's your first, the first leg down. This was a kickback rally, and I think there's one more leg coming down. So I might get interested in going long here around 1166. If it gets there, we'll just have to see. But let me just say, my opinion on the near-term direction of crude is not very strong right now, but I'm have a downward bias, slight downward bias right now. OIL is just another crude tracking and ETN. I think, if I recall right, the difference between USO and OIL is a pure play on WTI, West Texas Intermediate crude, whereas USO has heating oil and um, other oil-related products in there as well, if I'm not mistaken. Again, it may have changed. It's been years since I read the prospectus on that one. SOYB, soybeans. This was part of our recent JJG trade, which comprised soybeans, wheat, and corn. They've been doing great. It's coming up on some resistance right now. It's getting a little stretched. By stretched, I mean overbought. One measure of that is the RSI. You want to be careful when you see the RSI get well above that red line, which is the 70 level. If you don't know why, here's a few examples. I'm circling all the overbought readings, even if it just hit 70 or above in the last few years. And I'm going to circle now the tops that correlate with those overbought readings. And so as you can see here, um, at the very least, if you're long, you want to continue to trail a stop because sometimes overbought becomes more overbought, and the gains can be pretty lucrative, especially at the end of these runs. So either take profits when you see a well-defined resistance level hit, but at the very least, you don't want to start opening a position right here because as history shows us, again, this is 2 years without fail. I've circled every single overbought reading, and you can see what's happened in each instance very shortly after, either immediately or shortly after we hit overbought. So this I might be interested since I'm longer term bullish on a lot of these ag commodities. Maybe if we hit the support zone and the charts confirm, we can go long there, recycle back in, but stated both officially and personally, officially meaning the trade ideas on the site, personally meaning my own money. I've taken last week, closed out just about. I might have corn, but most of these ag commodities, JJG, I closed out for reasons I'll get to here in a second. Wheat, somebody pointed out wheat. It wasn't an official trade idea, but that hit a target. We'll get to that in a second. Took profits on that, and let's move on. So there's soybeans, looking stretch, right for a pullback. Can it go all the way up here? I tell you, if it does, that 2025 level, that is a very well-defined, I'm making a mess of the chart here, very well-defined resistance level. You can see these reactions back here. And that at that point, I would just say, personally, if I was long, which I'm not right now, soybeans, I would be a seller there at 2025 because we would be extremely overbought if we got there soon. Right now, we're just, fairly overbought, nothing extreme. This was an extreme reading right here. So let's move on to the next one. That one, this chart's a mess. That's a natural gas, one of many natural gas tracking ETNs. COW, COW. This is a livestock total return subindex. Where do I think this one's heading? I think it's heading lower. I'll tell you why. From a technical perspective, I see a very well-defined support slash resistance level here. It's support now because we're above it. But going back in time, where does this line come from? I see a lot of reactions from this on this level from above and below. Therefore, the bigger picture is we're trading right now between support and resistance. You can see this line here has capped all the advances. So this is a little sideways trading range. It can break either way. And, support is support until and unless broken. We're at support now. So if you want to go long for another bounce up in cow, that might work. And you could certainly, it's an objective trade with a stop not far below. But I think this one might break to the downside. One of the reasons is to feed, livestock, cows, pigs, all that stuff that's in here, you got to feed them grains. And right now, the grains have been shooting up in price. So if I'm Farmer Brown and and I raise livestock, but my cost to feed them just went up and has been going up and may continue to go up. So therefore, usually you see the grains and things like that go up. the things they need to feed the cows, their costs go up. So therefore, the profitability goes down. So that's that. And there's a nice support level. If we get down there, you can see a lot of reactions. This is a support zone. Sorry, wrong tool there. Yeah, I think you can see those to the left of the chart here. All these support levels. So this would be a pullback zone right here. I favor the top of the zone. That's where at least for the last couple years, that's where most of the pullbacks have stopped at. So that would be a drop of about from where we're at right now, 5.25%. And then we may be able to look to go long there depending on what the charts look like. DBA, this is a very well diversified ag fund. If your head's spinning as I go over all these individual commodities, you want exposure to commodities, but you don't want to own and try to manage a portfolio of half a dozen or more different ETFs, some long, some short. You can go long DBA, which is the Power Shares DB Agricultural Fund ETF, and I added the breakdown here. I went to their website. 14% or so in wheat, 13% in corn, 13% in soybeans. So that alone, keep in mind, and I try to point this out often when I put these trade ideas, if I'm trading the ag commodities, sometimes I will use a one size fits all, like the JJG trade that we had, which was wheat, corn, and soybeans. But this one also has cattle, live cattle, cocoa, sugar, coffee, hogs, feeder cattle, cotton. So you're really getting a boom, a one shot, one size fits all exposure to the agricultural commodities via this ETF. And it's starting to break above this downtrend line. That's not a very well defined downtrend line. I want to point that out, but there are a few reactions there. And there's also as you can see, 1953, I have a horizontal. It was resistance, and they've just taken it out. So the near term looks good on this one. Again, there's been a lot of interest from a longer term perspective, and I've shared this chart before when we had a divergent low right here. Those are the things I look for. We're very overbought, divergence on the PPO, just as we had a series of three divergent highs back here. Divergent low. Divergent low number one, rally. Divergent low number two was right here, rally. Divergent low number three was right here, rally. So it's pretty simple. Wash, rinse, repeat. This is a large part of my trading style. More often than not, if you identify these divergences properly, especially if you can then time your entries using the 60-minute charts, the shorter term charts. And again, this speaks to the benefit of swing trading. What I mean by that, if you look at this, the trend for the last couple years has clearly been bearish in DBA. You can see that we've fallen quite a bit over the last few years, but what I just showed you were one, two, three, four, five opportunities all pointed out here in advance. At the time, these divergent lows were either right before they were confirmed or right after. So there were four opportunities to go long. This last one, and again, I'm just measuring from low to high. Not that you would have caught every bit of it, but there was, about a 7% rally off that most recent divergent low. And again, these are commodities, so you're not looking at triple-digit gains on most of these rallies. But then again, your downside risk is not that bad either. It's not like they're gonna, it's a commodity ETN, so they're not going to come out and report bad quote unquote earnings. It's not a stock, it's not a company. They're not going to, have an accounting scandal. These are again commodities, so there's always going to be value there, and that's why I think it's a little less aggressive than investing in stocks when you invest in commodities. Of course, there's some particular dealings with certain ETNs, but for most part, most of these commodity ETNs are fine. I don't see any big risk on these, at least not at this time. All right, let's move along. Corn. Corn looks good. Corn was, I guess that was an official trade if I have it. Yeah, T1 here. T1 was just hit. I see some more upside in corn. It is getting extended. It's overbought. So, I booked full profits on this one on the site, and I can't remember. It doesn't matter whether I personally have a position or not. I have long-term accounts I may have left a partial position on because I do think corn's coming up to here ultimately, right there. So I closed the official trade just because we had a nice run. We caught it near the lows. It was a pretty straight shot. This one didn't have any frustration of trading sideways or testing our stop or anything like that. Was pretty much a straight shot up. So that one's hit. But if you want to know where I think it's going, it's getting extended. So maybe we pull back, come back in to test this level again. Maybe, maybe not. But I do see a very significant resistance level up here around 1850. So if you're still long or you want to buy this one on a pullback, this is where I think we're going before we get any type of major reaction. And ultimately, we had a target back here on a previous trade. We must have went long right off this divergent low and hit this $20 level. And you can see, again, that was a perfect time to reverse. We got out. That must have been the sole profit target. I don't see another one listed. If I did, maybe I took it off. No, I think that was the only one. And you can see, boom, it fell sharply. So I think we're going to get a little pullback if and when we get to 1850. However, if we can get above there, and I think that will happen at some point in 2018, we can power on up and test that $20 level again and maybe beyond. Okay, cane. This is one of two sugar ETFs. I probably have more annotations on SGG. I usually tend to trade that one. If I'm going to use the ETF or ETN. Sometimes I'll use the futures. It all depends on the trade, and almost always the official trade ideas will be these ETNs because I know the vast majority, or at least a good percentage of people that follow the site, do not have a futures account or they don't have the experience to trade futures or the capital requirements. So therefore, I'll use these ETNs as the preferred trading proxy. But if you are a futures trader and you want levels, you know, targets and things like that on the chart, just let me know and I'll be glad to give those to you. So here's what I see on cane. I see first and foremost a divergent low. I see positive divergence right here as it made this recent low. It's reversed so far. It's moving up. First target or next stop resistance is 924. You have a potential downtrend line here, and ultimately, I like this one. I think it can work its way up here, and this would be a longer-term swing target, 1073. Takes that out 1132, and I could easily see, later on this year 1225 being hit as well. So there's some potential in sugar. I think it's a potential bottoming play. And again, I'll go through the charts of the futures, and any of these that I have a high degree of confidence on, I can see a clear, well-defined entry. Reason to go long, I'll add those as official trades. I'll try to get some exposure back now that we've closed out several, such as JJG. This is JJG. Now, the reason I closed it out at T2 was originally the the second and final target when we entered the trade. We went long most recently on this divergent low back here, shortly after this divergent low, which was bullish. You can see strong positive divergence in the chart, just like we had. We had a divergent low back here. We had a divergent low back here with a falling wedge breakout. Again, simple. Wash, rinse, repeat. Go long in these divergent lows, long on the divergent lows. We went long on this divergent low. We hit that second target. That was the final target. I took that out and I took the trade off then. I decided not to extend it, even though I could see this one looks very strong. I really like this chart. This is the next resistance level I have up here. You can see it's about 28.75 or so, somewhere in there. We might get there. But as I mentioned, and thank you, somebody on the site brought this to my attention. The company that runs this ETF, or this ETN, I'm sorry, as well as a handful, they're retiring those. There's nothing wrong with it. They just came out with new versions for whatever reasons. There's something to do with how they structured these ETNs, and I guess it was easier for them to retire this one. It will stop trading, or it'll go to the over-the-counter market. They're going to delist this one about a month from now. So I think as you get closer to that delisting period, you're going to see more and more money go into the replacement, which is JJGB. However, I can't chart JJGB. There's not enough charting history. This is what the chart looks like. You can see very thinly traded. They're starting to see, if you can note the volume on this chart, you're starting to see more volume come into this. And what that means, if you know what you're doing, you read up on this, and you should read the news, know what you're trading, um, since that other one will be delisted at this point going forward, I don't think you should buy JJG. You'd be better off buying JJGB. Tough part is we have to now mesh the charts of the three components: corn, soybeans, and wheat. We have to sort of look at all three of those charts, see how they look to get an idea where JJB is going to be going. For the time being, we can see we can use JJG, that chart, and that still looks good. But what you'll start to see is volume will dry up as we approach that delisting date. And so there it is. If you're still long and you're trying to just milk it out, you've got another month or so. 2870 is the actual resistance level. I would sell a little shy there, about 2860. But I just got out of there, moved on to the next one. I'll just wait to the next stop and either trade the other individual commodities or the futures contracts. And then we'll watch JJGB as time goes on. The chart will start to develop and we'll have some price history to chart off of. Coal, KOL, coal miners ETF. Uh, there's a trend line. We had a divergent high right here. I'm not crazy about this one. I think this one's probably going to take out that trend line sooner or later, but we're still above trend. You can't short it yet, but if we do, that one may have to come back in, may need a correction there. I don't have a very strong opinion on that, but I wouldn't be chasing it here. Sugar, there's the other sugar ETN. You can see this is the one I've used official trades on in the past, and you can see the series of divergent highs in the past, followed by a divergent low, go long. Another divergent low here led to a little trade up, divergent low there. This was an official trade. Looks like we hit that second target and then reversed. Um, but right now I just showed you Cane, C-A-N-E, a minute ago, so I won't spend too much time on this. I don't have the levels marked up here, but same thing, same divergent low. Just picture that being a trend line. And this one looks like it's good to up to about that $32 level soon. JO, Coffee, ETN, I like it. You have a pretty well-defined downtrend line here. You have bullish divergence, just as we had bullish divergence back here. This must have been an official trade idea, and looks like we just hit the second target with a timely exit there, if I'm not mistaken, because we had a divergent low here as well. But I can see the price targets there, so that's what I was looking at. Divergent low, bullish falling wedge right here. And now we have a divergent low. So if history repeats, as it often does, we get those divergent lows, you get a nice pop out of the stock, or the ETN, I should say. And this one, there'll be stops along the way, but I think it can work its way back up here to that former T2 level, about 1875, just below the $19 level. From where we're at now, that'd be a gain of about 30%. So there's a lot of potential on that one. But the thing is, we're below trend. So to take a position here is speculative, it's aggressive. This one may want to go on, make a new low before it takes that trend line out. Maybe you build a starter position, but for an official trade idea, I'll probably wait until this one takes out that trend line, unless I see something else that looks compelling, a reason to go long before that. Wheat, final one, then we'll wrap this up. Um, there it is, nice downtrend line, back test. This is the one, this one I mentioned, somebody mentioned last week, asked my opinion in the trading room, and I had a position in this as well, as even though it overlapped JJG. But that was the level I was talking about. It hit a well-defined resistance level. A lot of reactions back here in the past from both above and below. You can see, I mean, on a scale of 1 to 10, that's got to be an 8 or better for a resistance level. And that's where we fell just shy of that. It was a good time to book some profits and had a pullback since then. Longer term, it looks good, but I think it just got a little ahead of itself and ran into resistance. So maybe a little pullback, which we've already had a couple days of. You can see that it pulled back pretty hard on Friday and may ultimately power on through there. But near term, don't have a strong opinion. If it gets back here, maybe recycling long again, but I'd prefer to see it work off some of these overbought conditions and then maybe look for some longer term targets on that one. All right, this has been Randy Finney with Right Side of the Chart. I realize that's a very long video, but as always, when watching these videos, you can just increase the playback speed in the YouTube settings, and I'd like to put on 1.25 or 1.5, and you can whip through these videos a lot faster. All right, have a great day.